Hello, everybody. And today I want to talk about SoFi. And SoFi reported earnings, and it's absolutely an outstanding Q2. The stock is up 19%, understandably, given how well they're doing. So let me go first through all of the strategic factors and why they're doing so well. So really, this business all starts with members, right? With their banking clients. And they have 6.24 million banking clients today. To give you an idea, I often take the example of Wells Fargo mobile banking customers. Wells Fargo only has about 24 million people who are on their mobile bank app. SoFi is an app. They have 6.2 million. They're growing extremely fast. And, if you invest in this company thinking that it may become a top 10 financial institution, say within the next 5 to 10 years, this is very encouraging to see at 6.2 million. Also noteworthy, the law of large numbers is barely beginning to apply. Look, we had 46% year-over-year growth, and now we have 44%. So a minus 2% in year-over-year growth when you're growing at more than 44% is absolutely outstanding and barely any deceleration. Like I said, the law of large numbers is not yet hitting SoFi. This chart of growth in customers is as flawless as can be, really flawless. But moving on, right? Once you have these members, right, they gotta buy products. So right now, members buy 1.51 product per member, to be exact, is sold. And this whole idea, how do you get exponential growth in revenue? Well, you want to increase the number of members, right? But you also want to increase how many products they buy per member. And I calculated it back. It's pretty flat right now, but eventually that will pick up. And so imagine if all of these members grow at 40%, but then if the product adoption grows even faster because each of these members now buys, say, 2 products per member. So that's how you can really get to exponentiality in the revenue growth of this company, even though you may have linearity in both the growth of products sold per member and in the growth of members, right? It multiplies itself. And noteworthy, they're growing across both of their divisions, right? Whether it's financial services products or lending products, these are growing very well. Now, of course, it's not surprising to see financial services products grow. It's kudos to them and better for them for growing lending products right now with the interest rates that we have. Imagine how well they will do when interest rates finally drop, right? As far as product adoption goes, that's what I'm interested in more than anything. Of course, right now, getting a loan, that's not very appealing right now. When interest rates drop, as they inevitably will, getting a loan will be much more appealing, and SoFi will do even better in that division, in that segment. Moving on to the AWS of fintech, as most people like to call it for SoFi. SoFi is this interesting company where you buy really 2 companies in one. You buy Galileo. Galileo provides the back-end infrastructure for a lot of neobanks, for a lot of apps out there. And the narrative over the past 2 quarters has been, the deceleration is here. Well, that has changed. We've had a break in that deceleration. Growth is back for their back-end Galileo service. And so they are providing now infrastructure of banks more than they were in Q1. So the growth is back on Galileo accounts, which is very good to see. Very, very reassuring and great to see. Let me now move on to the finance metrics. And talking about the finance metrics, what do we care about? Well, we care about net revenue, and that's it. At least that's what I care about. If you follow my channel, you know that I want more than 30% revenue growth. That's really how I gauge product or service adoption. And right now, year-over-year growth for SoFi is at 37%. So it's still well above the 30% that I require. And also noteworthy, given the pressure of Wall Street ever since mid-2022 in raising interest rates, they've been emphasizing adjusted EBITDA. Adjusted EBITDA, of course, is a proxy for cash flow in general. And what you can see here is that it's pretty flattish slash increasing, which a lot of traditional investors in Wall Street will like to see this increase in adjusted EBITDA. This is not a company that is at risk of bankruptcy, in my opinion, not investment advice. But this is not a company that has the liability of its newness anymore. That liability, in my view, is gone. This company is now ready to conquer the market. And moving on to what the market loves, which is the guidance. They beat their own guidance, right, by 4 to 2%, depending on where you look. I typically, this past few quarters, I've been taking the higher end of their guidance in my estimates. So to me, they've beat 2%. They've beat their guidance by 2%. To me, if you were taking the lower hand, they would have beat by 4% to you. But it's a beat nonetheless, and it's very pleasing to see a beat in this environment, right? After this narrative that we've heard for the past 6 months, it's very reassuring to see them beat. And it's also worth noting that for 2023, right, so at the end of last year, they gave guidance for 2023, and now they've upped it again. So this is the second time in a row that they up their guidance. And you can see their original guidance, their upped guidance one in Q1, and this is Q2, and they've upped it again. So will they up it again in Q3? Maybe. But right the midpoint right now of their guidance for revenue growth is 30%, which is exactly what I look for. I think they will raise it again, and they will beat it, as evidenced by the fact that they've been pretty conservative with their guidance over the past 2 quarters. And so this summarizes SoFi earnings in a nutshell. I will now be listening to the conference call and try to look for what I'm wanting to hear on the student loans, which is a big question for me in this stock. I own all of my shares of SoFi. I haven't sold a single share, not planning on selling a single share, owning it for 10 years. So that's how I feel about SoFi. I feel great this morning about SoFi, as I think we all do. All of us who follow this stock are pretty excited about the earnings. This was not investment advice. This is just entertainment. Hope you were entertained. Please subscribe. Thank you so much for watching, and see you in the next video.